Welcome. In this video is Xcn coin at the bottom price. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is examined carefully, it is clearly observed that the price movements are shaping around a specific curve, which appears to act as a resting zone or a resistance area. Whether this curve represents a dynamic resistance or a slope of an average in a logarithmic structure, the fact that the price has touched it multiple times provides a critical piece of data. In technical analysis, frequent interaction with a level or form indicates that the structure has been noticed by market participants and has established a market awareness. In the current situation, the price is hovering just below this curve and has made numerous touches. Despite so many attempts, the curve has not yet been broken to the upside, indicating that it is a significant technical boundary and that the market is at a decision point. However, this setup also suggests a maturing phase. The more a level is tested, the more energy is stored, and this energy can turn into a stronger movement after a breakout. At this point, if the curve is broken to the upside, it is highly likely that the price will enter a new trend wave. From an investor psychology standpoint, such curves are also highly impactful, especially when these sloped levels have previously acted as resistance multiple times. Breaking through them is interpreted by technical traders as a trend reversal signal. This automatically leads to an increase in long positions and a rise in market volume. This scenario can contribute to the price displaying a faster and more decisive upward movement following the breakout. Technically, curves often align with moving averages, regression lines, or slope patterns formed by the price over time. The current curve on the chart is not just a technical boundary, but also serves as a psychological barrier. In other words, breaking this level will not just be a linear crossing. It will also represent the collapse of the belief in the investor's mind that the price can't go beyond this. Overcoming this psychological barrier typically precedes the price gaining momentum and entering a longer and healthier uptrend. In such situations, what investors need to pay attention to is not only whether the breakout occurs, but also the volume and candlestick formations that follow the breakout. If a curve is broken and weak candles with low volume appear afterward, it is often a fakeout. However, a breakout supported by strong volume and followed by decisive closes confirms that the upward move is a genuine reversal. In conclusion, if this curve is broken by the price, we may witness not just a short-term bounce, but the initial steps of a larger structural shift. The price behavior around this curve offers new opportunities for investors while also providing an excellent basis for strategic planning, so long as risk management is maintained. But looking only at the curve is not enough. We must also consider other metrics. Stay tuned. When we examine the chart in detail, it becomes clear that the price is moving within certain boundaries, forming a channel formation, which is a highly important structure in technical analysis. This channel indicates that price movements are oscillating in an orderly manner and that market participants are making their buy-sell decisions in alignment with this structure. The observed pattern is currently framed by a resistance line from above and a support line from below, with the price swinging back and forth between these two limits like a pendulum. Within the channel, there is also a middle band, which functions as a dynamic level that can act as both short-term resistance and support. At present, the price appears to be moving between the lower boundary and the middle band within this channel formation. This suggests that the market has yet to establish a clear direction, and that a search for direction continues with limited volatility. In technical analysis, such structures are often interpreted as accumulation or consolidation phases. When the price approaches the lower band, it can present a potential buying opportunity for investors, while movements toward the middle band generally act as temporary resistance and may trigger profit-taking. However, if the middle band is surpassed, the price may initiate a new attempt toward the upper boundary, potentially signaling a short-term uptrend. In such channel patterns, price movement within the channel typically continues in a rhythmic fashion. As long as the price finds support at the lower band, it tends to move upward again, and a slowdown or hesitation is often observed upon reaching the middle band. This shows that investors develop buy-sell strategies by considering the channel's upper and lower boundaries, which is why the price struggles to break out of the channel. However, these channel patterns do not last forever. There is always the potential for a breakout. The current pattern may also suggest that a decision point is approaching. If the price heads toward the lower boundary, a strong reaction at that level could spark another upward move. On the other hand, every contact with the middle band may serve as short-term resistance, but if it is broken with sufficient volume, the likelihood of reaching the upper band increases. Therefore, close attention should be paid to how the price behaves at the middle band. This level carries dual risk as it has the potential for both breakout and rejection. From a psychological perspective, these channel formations are quite instructive. If the price reaches the lower band, especially if it has previously reacted from this area, it strengthens the perception among investors that this might be the bottom, and buying pressure builds. When the price approaches the middle band, it creates hesitation for investors, as this is a zone of uncertainty. Is a breakout coming, or will there be another rejection? At this point, additional confirming signals such as technical indicators, volume analysis, and candlestick formations should come into play. Finally, from a broader perspective of the entire channel, if the price continues to move within this structure without a breakout, it can be said that the channel offers short to medium-term trading opportunities. However, the key aspect of channel patterns is how strongly the price breaks out and whether that breakout is sustained. A break below the lower band may trigger sharp downside selling, while a break above the upper band could signal the beginning of a new upward trend. Therefore, based on the current positioning, monitoring the price movement within the channel, considering potential buying opportunities near the lower band and resistance around the middle band, would be a highly rational approach to minimize risks. Tracking this channel structure is important. When we carefully examine the chart, a clearly defined resistance line has formed on the RSI, or Relative Strength Index indicator. This resistance level has historically acted as a ceiling for the RSI during several upward attempts. Each time the RSI reached this level, it failed to break through and reverse downward. Therefore, the RSI's struggle to surpass this particular level may indicate that buying strength in the market has not yet fully recovered. However, it can also be seen as a sign that accumulation is nearing completion and that a strong breakout could be imminent. The RSI touching a specific resistance level multiple times without breaking it can be likened to a shaking out of weak hands process in technical analysis. This situation creates two simultaneous emotions among investors: anticipation and impatience. Yet indicators like the RSI are quite effective at measuring market momentum and gauging price pressure. As such, the RSI's behavior and acceleration as it approaches this resistance line offer serious clues about how price may react. If the RSI manages to break through this key level with strength, it usually signals that buying pressure is increasing and that momentum is accelerating to the upside. Especially if this RSI breakout occurs simultaneously with a price breakout from resistance, it provides a dual confirmation in the market and often triggers sharp upward moves. That's because a breakout is happening not just in price, but also in a major indicator like RSI, which increases investor confidence and can spark new capital inflows into the market. In such scenarios, another important factor for investors to watch is the pace at which the RSI approaches the overbought or oversold zones. If the RSI is nearing the resistance with increasing momentum, this suggests that the rally could be sustainable. However, if it approaches the resistance weakly and immediately faces selling pressure at that point, it could indicate market indecision and a lack of sufficient strength in the upward move. It should also be noted that the RSI's reaction to certain levels carries psychological implications in addition to technical ones. Many investors base their positioning on this type of indicator. A breakout on the RSI can create a perception that now is the time to buy, which in turn empowers the buying side. Therefore, the RSI breaking through a resistance level can influence price direction, not only technically, but also psychologically. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.